Yeah, Macquarie's a big bank.
Sahar Ghali was convinced by a financial planner to move about $100,000 of her super into an investment fund on the Macquarie platform.
But just the pressure to sign quick, 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 quick. When I logged in, I saw that it was in Shield and I thought, oh my goodness, now there's trouble.
The Shield Master Fund collapsed and Macquarie's now agreed to repay 3,000 investors that used its platform. They'll receive $321 million after the banking giant failed to place Shield on a watch list for heightened monitoring. Macquarie won't face a civil penalty.
We took the view that the public interest here warranted getting that money back now.
Macquarie Group said payments to investors will be made in full by the 30th of September, and its decision recognises the scale of the issue, its material impact on many investors and their limited access to recourse. The corporate watchdogs put other superannuation funds on notice, taking action against equity trustees for its role in the Shield case. NatWealth and Oversaw are also in its sights after the collapse of another fund, First Guardian.
Superannuation funds have to be applying far more scrutiny to the products that they put on their shelves.
The collapses of the Shield and First Guardian schemes have exposed deep holes in Australia's $4.3 trillion superannuation system. The federal government's now considering policy changes to ensure the same thing doesn't happen again.
I think we need to look at ways in which we might strengthen regulatory arrangements in particular areas.
Which comes a little too late for investors like Sahar, who've endured a stressful ordeal.
And for more on this case, the ASIC Deputy Chair, Sarah Court, joined me. Sarah Court, welcome to The Business.
Thank you very much, Alicia.
Has Macquarie got off lightly here?
We think that the payment by Macquarie is a very appropriate resolution of these matters. And we have always said from the start that getting money back to investors as a result of these failed schemes, like the Shield Master Fund, has been our primary goal. So we said we wanted to do, and we have gone some significant way to achieving that today.
What's the scale of the civil penalty ASIC could pursue against Macquarie for contravening the Corporations Act?
Oh, look, those really vary, Alicia. It's a very open question in terms of, the size of contraventions, the size of the conduct, how many people are affected. Penalties often are in the range for, I think Macquarie's paid 20 million or 25 million previously. What I can say with significant confidence is that $321 million is very significantly more than Macquarie would ever have been ordered to pay by a court were this matter to be contested in a court. We've thought very carefully about the issue, about penalty versus compensation, that the right thing to do here, the public interest here, is to get money back to those investors in full, with certainty and in a timely way. And we have seen some of those investors getting monies in their accounts as early as today.
Is there a risk the federal court won't sign off on this compensation deal? It sounds like it's happening.
This compensation or remediation being paid by Macquarie, or a goodwill payment, I think they call it, I don't mind what they call it. What I care about, what ASIC cares about, is that people get their money back. Now, the matter's in the federal court, and it will be for the court to determine whether or not it declares that Macquarie has broken the law. We think Macquarie has broken the law. They've admitted they broke the law. But in terms of these payments to investors, we have organised that to be done by way of a court-enforceable undertaking to ASIC. And in this case, irrespective of what happens in the federal court, that undertaking has been given and accepted, and those payments will be made.
ASIC is also suing the other trustee that had Shield on its platform, Equity Trustee Superannuation. Do you hope this agreement with Macquarie will bring it to the negotiating table?
Our number one aim in this suite of very complicated investigations ASIC has had underway for some time has been to freeze assets, get travel restraint orders and get monies back for investors in any way that we can do that. So we are obviously encouraging any other trustee out there to think about this, to look at the court outcome if the court makes this declaration, and certainly to come and speak to us about how these investors can be appropriately, put right.
In the Shield case, many investors thought they were investing with Macquarie. How can transparency be improved around these schemes on the platforms to make it clear where investors are putting their money?
Certainly, one of the things that we are hoping that this action today will show is that, in our view, superannuation trustees who choose to operate these kind of wrap platforms, who choose to have a range of funds on those platforms, like First Guardian or like Shield, that they have some obligation to make sure that those funds are fit for purpose, that their members, their superannuation members, are investing, only smaller amounts. Like in some of these circumstances, we see people with their full superannuation investment monies with one fund, with a First Guardian or with Shield. We think the trustees have got obligations to make sure that doesn't happen.
Sarah Court, thank you so much.
Thanks for having me on, Alicia.